Welcome to the eMortgage Management Hour, a straight talk show designed to give you the truth about mortgage financing in the greater Tampa Bay area. The views and opinions of your host, Scott Pendleton, and his guests do not necessarily reflect the views and opinions of WHNZ or its advertisers. And now, your host, Scott Pendleton.
How's everybody doing out there today? Thanks for listening in to the eMortgage Management Hour, where E is for education. I am your host, Scott Pendleton. eMortgage Management is a licensed mortgage banking firm, NMLS number 2926, and all of our contact information can be found at tampabay.emmloans.com. Today we're going to be talking about a couple of different topics, and I also have a guest with us today. Actually, one of my newest loan originators, mortgage loan originators in my office, Raul Alvarez. Raul's going to chime in here in the second segment of the show, tell us a little bit about himself and why he decided to come work for eMortgage Management after working for some of the big banks over the last several years. So one of the other things that I want to talk about is about some of the big banks and some changes that we're seeing in the marketplace that you as the consumer need to be aware of. And I'm not going to turn this into a total bash session of the banks because I think there's a time and place for all lending institutions. But I'm just going to give you my 2 cents on some of the things that I'm seeing in the market. Quick overview about eMortgage Management. eMortgage Management, we are a mortgage banking firm. We're a direct lender. We specialize in residential mortgages. We are not a bank. As I've discussed several times, we don't take deposits. You can't come in and cash a check with us. We don't sell other financial instruments like CDs. We are just a mortgage banking firm. We focus and specialize in residential mortgages. And once again, you can always find our contact information on tampabay.emmloans.com, or you can call us directly at the office. Our direct number is 813-517-0795. Little introduction about myself. My name is Scott Pendleton. I'm a 16-year veteran of the mortgage industry, working primarily in my career as a banker / broker. Through my career, I've focused primarily on residential purchases and residential loans. I take very seriously the mortgage process and the education process. When I work with a consumer, I want to make sure that from an educational standpoint that they understand the loan program thoroughly, they know what they're getting themselves into, they understand the qualification standards, and that they understand, why one loan product may be better than another. I'm also a veteran of the United States Coast Guard. I really enjoy working with veterans. I enjoy doing VA loans. It's exciting when you see an active duty or retired military member, get into a property with zero money in. VA loans do offer 100% financing, which is a phenomenal benefit for our veterans out there. So, as we kind of discuss, and as I've said several times, we're not a bank. We're a direct lender mortgage banking firm. We just specialize in mortgages. A lot of times people feel that going with their bank, whether, if you bank at a Wells Fargo, a Chase, a Bank of America, Fifth Third Bank, the list goes on, Regions, there's, a litany of banks out there that we deal with. There's usually, I know in my neighborhood, there's one on every corner, literally. When you see these big banks, a lot of people feel like, if I'm going to get a mortgage, I'm already doing all my banking with X bank. I'm just going to go ahead and get my mortgage through them. And let me tell you, that's not always the best option for your lending needs. And the reason I say that, we're starting to see some real shifts in the industry as far as how banks are looking at lending. And what we're really starting to see, what I'm starting to see and what I'm starting to read in things like the National Mortgage News, which is a newspaper I get on a weekly basis, I'm starting to see a lot of articles about how the big banks are very cautious and wary of what type of lending they're doing, specifically FHA. So, for example, in last month's issue of the National Mortgage News, John Shrewsbury, who's the CFO of Wells Fargo, said that the bank will not make loans to FHA borrowers with low credit scores because of the highest rate of default. So basically, what Wells Fargo did about a month ago, they took their minimum credit score, which is typically a 600 for an FHA loan, and they raised it to a 640. And what they've also done is added more overlays or restrictions on what they will do for people from an FHA financing standpoint. So I've seen this with Chase as well. Chase had just released an article a couple of weeks before this one where, they've basically done the same thing. They've raised their minimum credit score. I believe with Chase, they even raised it to a 660 score, meaning that they will not do an FHA loan for anybody that has a credit score below 640 or 660, which, unfortunately is very common these days. These big banks are basically saying that we don't want the risk. The federal government is putting too much pressure on them with loan defaults because they're so big. There's a lot of scrutiny on these big banks, and they're basically saying, we want out of the FHA loan business. We don't necessarily care. Well, I shouldn't say that. They are taking less of a positive view of FHA loans, and they're saying, regardless of what's best for the customer, they're just not going to do these type of loans. So, for example, us as a direct lender, I have options. So, one of the things that we're able to do at eMortgage Management, because we're a direct lender, number one, my minimum credit score within the eMortgage Management guidelines or platform, I can go down to a 600 credit score. That's FHA and VA. And let me tell you, I do a lot of that business. And there's a lot of reasons somebody may have a credit score below a 660 or 640. I mean, think about it. Maybe there's a listen, we saw probably one of the worst financial recessions, with the exception, in the last several years that, a lot of people were forced into situations where they had to go through a bankruptcy, a short sale, or foreclosure, and those things have an impact on credit. I see divorce situations all the time that usually have a negative impact on credit. Sometimes people have medical collections because due to what's going on with Obamacare and things of that, they don't have the proper coverage or they can't afford the proper medical coverage, which is in turn forcing them to, incur collections on medical debt. And all these things impact your score. The good thing about FHA is designed and is more liberal with those type of debts. And the reason the FHA loan product is there, it's to help people that maybe don't have perfect credit to qualify for a loan. So when these big banks are making it more restrictive, they're very limited to their client base. Because I can tell you there's a lot of people that bank with Chase and Bank of America and Wells Fargo and other banks that don't have perfect credit. Well, we're still going to work with those clients. Now, even though I go down to a 600 credit score on my standard product, because of the type of lender we are, I also have the capacity to broker loans, which is really nice. So I'm kind of the best of both worlds. I'm a banker and I'm a broker. So with me having the capacity to broker loans out, I actually have programs that will go down in the 530 range and credit score wise, and maybe still be able to qualify for an FHA or VA loan. Now, with that being said, the standard down payment on an FHA loan is 3.5%. If your credit score is below 580, FHA changes the rules a little bit. If your credit score is below a 580 with an FHA loan, now the minimum down payment increases to 10%. So that's something to be thoughtful of, and you have to bring that into the equation. So, the real thing to think about here is making sure when you're looking at your options that you know all the options that you have. If you just walk into your bank and your bank says, no, I'm sorry, you don't qualify because of your credit score, that doesn't mean that there's not another entity or mortgage banking firm that may be able to help you. And there's a lot of good mortgage banking firms out there. Let me tell you, there's a lot of good banks out there. If you've got great credit, high 700 credit scores, low 800 credit scores, and you've got 20% down, in some of those situations, I'll be honest with you, the bank might be your best option, especially if you have a tremendous money and assets with them. I lost a deal to Chase Bank last year, and I'll be perfectly honest with you. I was surprised by the rate that this client was offered by Chase. And I was very honest with them. I said, listen, if they're offering you that rate with that discount in closing costs that they were being offered by Chase, I said, I can't meet it. I can't meet it or beat it. I said, if that's the real deal, go get that deal. Now, it just so happens that the realtor working that transaction was a friend of mine, and the deal did close. And I followed up on it. I said, hey, did this client really get that rate, which was, if I recall, probably about 0.25% lower than what I was offering, even with giving a little bit of a concession on a 30-year fixed mortgage. And yeah, they did get that deal. And I found out afterwards, because I had a very good friend that was a regional manager for Chase. I asked him, I said, how exactly were you able to give that client that rate? And the bottom line is, because they were what they consider a premium client, because of the amount of money they had in assets with them, that particular client, and how good of a client they've been, they basically say in those situations, we're just going to give them what they need and what they want. We don't care if we even make money on the loan. We want to keep the client at all costs. So remember, these banks, they have an incentive to keep those assets with that bank. So sometimes they'll just give away the mortgage for the right client. So there are instances where the bank sometimes could be the better option. But in those cases where you need an FHA or VA loan and maybe you don't have perfect credit, I would have to say typically the bank's probably not going to be your best option, especially with what's going on right now within the banking industry. They're just stepping away from it. One of the articles I read a couple of weeks ago, Chase Bank, second quarter of this year, the whole country, all the Chase banks around the country originated and closed just over 400 FHA loans. That's in the whole United States of America second quarter. So that's a perfect indication that Chase Bank does not want to do FHA loans. They've made it very restrictive and very difficult, and their pricing is so terrible on FHA loans. The rates are so high, nobody would want to go to Chase for an FHA loan. So the 400 people that did get their FHA loan through Chase probably got a terrible, terrible interest rate as well. So with that being said, let's talk a little bit about the FHA loan. You keep hearing me say FHA, FHA. Well, what is it? An FHA loan, the Federal Housing Authority, is basically a government-backed loan where the government's saying, if you're a first-time home buyer or you don't have perfect credit, come to us. We'll give you a loan for 3.5% down. So for the simple math of it, if you're buying a $100,000 house, your down payment, 3.5%, would be $3,500. VA, if you are a veteran and you qualify for a VA loan, you can get 100% financing. And then the typical conventional loan would require 5% down. Now, there is an exception to the rule. If you are a first-time home buyer and you have pretty good credit, you can possibly qualify for a conventional loan now with 3% down. That's a newer program that we've seen the last couple of years. Also a very good program. Some of the caveats with these programs is how much of the mortgage insurance is going to cost you on a monthly basis. So there's private mortgage insurance, and then with FHA there's government-backed mortgage insurance. So on an FHA loan, it's a set price regardless of your credit score. So somebody with a 700 credit score, they're typically going to get about the same rate and the same rate for mortgage insurance that somebody with a 600 credit score would get. FHA loans are not very credit score sensitive. FHA loans will allow us to ignore medical collections. There's some other specifics regarding how we deal with other collections, but if you don't have perfect credit, it's okay when it comes to FHA. On a conventional loan, everything is credit score driven. So if you have a lower credit score on a conventional loan, your mortgage interest rate is going to be higher. your mortgage insurance premiums are going to be higher because it's all driven by the credit score. So those are very important things to keep in mind. Now, the FHA loan has its issues as well. So one of the things to be thoughtful of and to think about when you get an FHA loan, that mortgage insurance that you pay on a monthly basis, it's for the life of the loan, regardless of how much equity you have in the home. So when you get an FHA loan today with mortgage insurance, you need to be aware that that mortgage insurance premium is for the life of the loan. You're going to have to pay that throughout. If you were to keep that mortgage for 30 years, which is not very common anymore, most people only hold a mortgage for 5 to 7 years. That's the industry standards that we read. After, being in the home for 10, 15 years, let's say you've seen some appreciation in the property value and you've paid it down and you've got quite a bit of equity, it doesn't matter on an FHA loan. You're going to be paying that mortgage insurance for the life of the loan. Now, when it comes to conventional loans, if you're putting 20% down on a conventional loan, you don't pay any mortgage insurance. You don't have to worry about it. When you do that scenario where you're putting less than 20% down, let's say 5, 10%, the mortgage insurance, depending on your credit score, is going to be a set fee that you're going to pay on a monthly basis. And then after you see some appreciation and you pay down the principal, you have an opportunity to go to whoever's servicing the loan and say, listen, I believe at this point in time that I have at least 20% equity in my home. I would like for you to potentially order an appraisal. Let's see where the value is and how much I owe. And if you are under that 80%, you can eliminate that mortgage insurance on a conventional loan. So, something I see out there from time to time is, I will see brokers that will push people into FHA loans, and really they're doing it just because it makes them more money. The margins on FHA loans, because they're government-backed, typically most lenders, direct lenders, brokers, make more money on those loans. But that doesn't necessarily mean it's the best thing for the consumer. What we really try to do at eMortgage is educate the consumer and give you options. I'm going to give you, or Raul or anybody that works for us, we're going to give you, the whys behind an FHA loan and a conventional loan so you can make a determination if that's the best product for you. Other things to think about with FHA loans, there's no prepayment penalties. We talked a little bit about the flexible qualification requirements. It's just a little bit more liberal when it comes to the underwriting standards on FHA loans. Minimum down payment 3.5%. Seller concession, meaning the seller can pay up to a certain amount of your closing costs. So on an FHA loan, the seller can pay 6% of your closing costs. Now, I got to tell you, very rarely will you have a total of 6% in closing costs. That number seems quite high to me. On a $200,000 purchase, for example, you wouldn't see $12,000 in closing costs unless somebody's gouging you. But FHA loans are very liberal in that example on what the seller can pay in closing costs, where on a conventional loan, it's typically 3%. Unless somebody's putting 20% down, then that number changes a little bit. But for that person putting anything less than 20% down on a conventional loan, the seller can only pay 3% of their closing costs. So that could be a factor or a reason that maybe an FHA loan would be a better option for you, because you need those seller concessions. You need the closing costs paid. Maybe you only have a fixed amount of money. You've got enough money for the down payment, but you don't have enough money for the down payment and the closing costs. That's where you've got to really work with a good full-time professional realtor to make sure that they negotiate that deal properly for you so that seller pays the closing costs, all right? Because the reality of it is you can't really roll closing costs into the loan amount on a purchase, and this gets a little confusing for people sometimes. It has to be rolled into the purchase price. The seller has to pay the closing costs. Now, with that being said, the other thing that a good realtor is going to tell you and should be advising you on is that property also has to appraise for that new purchase price. So in the example, let's just use $100,000. If I'm buying a $100,000 house and my closing costs are $5,000, and I want the seller to pay $5,000 in my closing costs, maybe you negotiate the deal, a purchase price $100,000. You go back to the seller and say, listen, I'll pay you $105,000 for this house. You pay $5,000 in my closing costs. As far as the seller's concerned, right, net, he's making the same amount of money. The caveat is when the appraiser goes out and appraises that piece of property, that appraiser has to come up at a value of $105,000 because we lend on the lower of the appraised value or the purchase price. So if the property appraises for less than the purchase price, everything is based on that appraised value. So if the property in that case only appraises for $100,000, not $105,000, now that $5,000 is lost. So, it gets a little confusing, but once again, that's why you want to work with a professional realtor, professional mortgage banker, so we can answer those questions for you and lead you down the right path. There are obviously a lot of different FHA products. You can refinance through an FHA loan. FHA loans do allow for cash-out refinances. If you currently have an FHA loan and maybe you're at a little bit higher interest rate, FHA offers what's called an FHA Streamline refinance. Now, the nice thing about that is we don't have to typically have a new appraisal done. We don't have to document any of your income. And a lot of times we don't have to document any assets. Now, if you are coming to closing with any money, we may have to document some assets, but it really is a true streamlined process. We're going to refinance you based on the fact that you make your payments on time. And ideally, we want to see that the last 12 months you've got no late payments on your mortgage. Ideally, we'd like to see that you've never had any late payments on your mortgage, pay your mortgage on time. And then you can do an FHA Streamline refinance if you currently have an FHA loan and take advantage of the lower interest rates that we're seeing right now. And we are seeing some very low, aggressive interest rates on government loans, typically under 4%. The other thing that's great about FHA loans is your down payment can be a gift. If mom or dad or a direct family member is willing to give you a gift and say, hey, you know what, we want to just, young couple just got married, we want to give you $10,000 to help you purchase a home. That's great. We can use that money when it comes to for your down payment on an FHA loan. There's a lot of things to kind of be conscious of, and you got to think about a lot of these things when you're going through the mortgage process. I keep harping on the fact that you got to make sure you're working with a professional. Our goal is to lead you down the path of understanding. That's why I always say e-mortgage management, E is for education, because we really do believe that educating the client is extremely important. Once again, you can always find our information at tampabay.emmloans.com. You can call us directly at 813-517-0795. We're always available to answer your questions. I've got a team of 5 loan officers right now in our office. We have 2 full-time processors. And our goal is to really take you through the process and get things done for you in a timely manner. One thing that I can't stress enough is making sure you're working with a full-time professional realtor. Understand, if you're buying a home, working with a realtor costs you $0. The seller and the seller's commission, real estate commission, the selling agent's real estate commission pays the buyer's commission. So for you as the buyer, there's absolutely no reason not to be working with a realtor. You absolutely need to have representation from a realtor when you're looking to purchase a home. There's, in my opinion, with everything that's involved in contracts these days, with escrow money deposits that are involved in these transactions, you need to make sure that you have really good representation. You got to make sure you have the right person representing you and looking out for your best interest throughout the process. When we come back, we're going to talk a little bit about FHA loans, maybe touch a little bit on VA loans as well. Once again, we really enjoy doing these type of transactions. Also, when we come back, we're going to talk with Raul Alvarez. Raul's going to tell us a little bit about himself. We're going to learn about him. And throughout the weeks as we continue on, I'm going to start bringing in more and more of our team of loan originators to tell you about themselves, because it's not just about me. I want to make sure that you get to know everybody that works with us on our team, from our loan originators to our processors, so that you get a better understanding of the overall mortgage process. And hopefully, when you're ready to make that decision, you come to eMortgage Management. So we'll be back in just a few, and look forward to talking to Raul. Welcome back to the E-Mortgage Management Hour with me, Scott Pendleton, and my co-host, Seth Robbins. This next segment, we're going to get into a little bit of detail about VA loans, the loans for true heroes. We're going to talk about what makes you eligible and things of that nature. After we get into that, we're going to talk a little bit to our two guests, Scott and John, and they're going to tell us about the market and what's going on in real estate right now in the greater Tampa Bay area. So with that being said, I'm going to let Seth kind of go into the VA loan a little bit. So Seth, I mean, obviously, just because you were in the military doesn't mean you get a VA loan. There are some requirements. There's some guidelines. You have to be honorably discharged, things of that nature. But tell me, who's eligible for VA loans? What is a VA loan?
All right, so a VA loan is administered by the Veterans Affairs Administration, by the federal department, by the feds up in Washington, D.C., and we've heard about the VA because of some of the other stuff that goes on out there. But this is truly one of those programs that I can say unequivocally, having done this for 12 years, that if there's one thing that the VA absolutely does right and gets right every single time, it is this program. And so the Veterans Affairs Administration, what they do is they started back, I believe, right after World War II. So back in the 1920s. They introduced this program to be able to help folks to be able to help returning veterans become homeowners. And then what happened was that they ramped it up big time right after World War II. World War II is when they passed the Montgomery GI Bill, and they also made this a permanent fixture. And we really saw the baby boomer generation and the greatest generation that came before. We saw them being able to reach out after their military service in World War II and defeating the Nazis and defeating the Axis out there. Not only building the phenomenal, incredible nation that we live in today, little things like, the Hoover Dam and the interstate system that they built. One of the rewards and one of the things that they did that allowed that kind of success to carry forward and made us this great country that we are today, and the economy that we have, the economy, whether it's doing well, whether it's running along and humming along, or if it's not, we're where we are today because they were able to become homeowners and build communities and build things. So that's what the VA loan was designed to do, is to help veterans and also active duty who decided to make a career out of it become homeowners.
Right. And like I said before, this program is really designed for retired active duty military. Obviously, if they're active duty, there's no issues. Typically for honorably discharged veterans, reservists and National Guard are eligible for the
Correct.
program as well. Typically, when you start talking about VA, the guidelines are a little less restrictive. It kind of acts in the same realm of like an FHA loan. Credit score is not as restrictive. The rates on VA loans are typically lower than conventional loans, so we're offering a little bit lower rate. They are government-insured loans, or government-backed. There's no monthly mortgage insurance with a VA loan. That's another great benefit. And if I didn't say it, they're 100% finance loans. So for zero down payment, that veteran or active duty military, whoever's eligible, if they can get that coveted certificate of eligibility, which is something that veteran will understand, they are eligible for 100% financing. And typically in these transactions, and if you listen to some of our previous shows, we've given you some examples. Typically in these transactions, that veteran's walking into this home with no money out of pocket. With the seller concessions, which are the seller can pay up to 4% of the closing costs of the veteran, which typically would more than cover all their closing costs. That veteran has the capacity to purchase a home, zero money down. You're going to put up your typical escrow money deposit or good faith deposit. So say you're buying a $100,000 house, you're going to put $1,000 escrow money deposit up. If you can get the seller to assist you with closing costs in the form of a seller concession, and you're getting 100% financing, typically when we go to closing, instead of the borrower coming to closing with money, they're getting their $1,000 escrow money deposit back. And there's nothing better than walking into the closing room at the title company, signing all your disclosures, and them handing you a check with the keys to the house.
Last month, just got the opportunity to do that with one of my clients who did a purchase of his home. In fact, the last week, the program, we talked about his scenario, and
right.
Yeah, he got his $1,000 check back, which was really helpful because then he was able to go repair the fence on his new home that he had just bought and have a fence rebuilt around the property line.
Nice. So tell me, Seth, obviously there are, some administrative fees with a VA loan. Tell me about the upfront funding fee.
So the upfront funding fee is a percentage based on how much money you are putting down. Because yes, you can do 100% financing, but what that is so if you do 100% financing, there's a little more risk that's involved. There's going to have to be a little more insurance issued by the VA, and so they charge what's called an upfront funding fee. And so what that is it's a percentage. It's actually 2.15% for the first time use. And if you've ever used your VA loan before and you're coming to use it again, there's an additional subsequent use fee that's a little bit higher at 3.3% at the 100% usage level. Now, what that is you're paying it forward for the next veteran coming behind you. And as much as it's painful to have a little bit of extra coming out of your pocket for that, it gets tagged on top of the loan. It's not money that has to come out of your pocket. It's going to be just added to the top of the loan. So you're actually getting to finance, like 101% of the value of the home when that comes down like that. But what's important to remember is that you are paying it forward to the next veteran or the next active duty military member coming behind you to be able to utilize this benefit. That's how they continue this to roll forward and not cost the taxpayer a mint to do it.
What if the veteran's disabled?
Well, having used my VA loan benefit myself in the past and having currently actually being a disabled vet, then I can tell you this, knowing firsthand personally that the beautiful part about this is as a reward to veterans who have, again, suffered wounds that either may be visible or not visible to the public, they actually waive that funding fee. Okay. So it's just their way of saying, not only have you served your country, thank you for serving your country, but it's also them saying you've sacrificed above and beyond just serving your country.
That's fantastic. So, there is a little bit of administrative cost with the VA loan. If you're, a disabled vet, they waive that funding fee. Once again, it doesn't come out of pocket. It's not something that's costing you. They take that, 2.15% or 3.3%. They spread it out over 30 years, and typically it doesn't really affect your payment very much. And like I said before, the rates are much better on VA loans. I've done VA loans for clients, even though they're putting 20, 25, 30% down sometime, and they can get a conventional loan with no mortgage insurance because the rates are so much lower, it's still a better option for them. So, and that loan program is if you currently have a VA loan, if you're above 4.75%, you need to reach out to us. We do what's called a VA streamline, we'll call it. In the industry, you'll hear us call it a VA IRRL, but it's basically a VA streamline refinance product. It's a great loan program. We don't have to redocument your income as long as you're making your payments on time. We're not going to order an appraisal or anything like that. It really is truly a streamlined process, and we could definitely save you money and get you into a lower interest rate. And a lot of times in those situations, we can cover your closing costs for you. Just reach out to us at tampabay.emmloans.com, and we're happy to have that discussion with you. So when we talk about VA loans, if you remember last week in the show, we talked about FHA loans. In our market, there's an FHA loan limit. It's $271,050. So that's the highest FHA loan we can do. The nice thing about VA is VA loans go up to the conforming loan limit of $417,000. So you could go buy a house for $417,000 with your VA benefit and get 100% financing. The other thing to think about with that is, even if you are looking to purchase a home above that price range, there is a VA jumbo product, and most people don't know about it and aren't aware of it. The VA jumbo product is a great program. Basically what VA does is they're insuring 25% of the loan. So if you do a VA loan over $417,000, basically you come up with 25% of the difference. So let me give you an example. Say you're buying a $500,000 house. In that example, you'd have to come up with 25% of the difference. In this case, the difference is $83,000. So of that $83,000, your down payment would be $20,750, which equates to about a 4% down payment. And I don't know anybody that's doing jumbo loans with 4% down. And I can tell you that VA loans, the rates are way better than jumbo pricing. So, most scenarios with jumbo financing, there's always exceptions to the rule, but generally speaking, most people getting a jumbo loan are looking at putting 20% down. So you're talking about the difference of putting $20,000 down or $100,000 down. in that scenario, the VA loan is a much better option, and it, like I said, is a very, very, very good product.
Well, and on top of that, one of the things also that the listeners need to know is that besides the financial benefits of utilizing the VA loan out there and the great benefits that it affords them from that, one of the biggest other benefits that it affords veterans, especially as they get into the latter years of their life and they're moving towards that time where it's time to kick back, relax, and they're moving into their golden years. Then one of the great things about that is that life happens, but the VA loans afford specific protections for veterans if they do have some financial difficulties, if they do run into some bumps in the road as they get into those golden years. There's some additional protections that are built into VA loans to be able to help out vets.
So, listen, nobody wants to see somebody that served our country in a bad spot, but unfortunately it happens out there. So, there are some other programs within the VA realm. We do offer a VA construction to perm loan where basically you're building a home. You're doing new construction at 100% financing. Another phenomenal product. It's a great opportunity if you want to build a house. When you start talking about VA loans or any loan, we always talk about the type of property. There's obviously single-family homes out there. There's townhomes, condominiums. Condominiums are always a little bit trickier when it comes to VA loans. And in those scenarios, what you have to be aware of when you're looking at purchasing a condominium, if you want to buy a condo and you have VA eligibility, that condo has to be on the VA approved list. And I can tell you, there's not a lot of them. I checked this morning. Right now in Hillsborough County, there are 51 approved condo projects in all of Hillsborough County, and in Pinellas County there's 48 approved condo projects. So you're pretty limited in what you can do and what condo projects are available. So the thing to be conscious of and think about if you're thinking about buying a condo, which don't get me wrong, for some people the condo life is great. I'm about tired of cutting my grass. I'm ready to move into a townhouse or something like that and have less maintenance. But it's just something to be to be conscious of and to think about if you're using your VA benefit.
Well, and I was going to say, so basically in the Tri-County area, there are 99 approved condos for the VA. I'm pretty sure, and I'm sure that's something that we can shoot towards Scott and John when they're coming on here, that there's more than just 99 condo groups here in the Tri-County area.
Yeah, there's obviously a lot of condos in our market. So with that being said, let's introduce our guests, Scott Lynn and John Freeman from the Tri-Fin team at Charles Ruttenberg Realty. A little bit about the guys. So let's start with John. John is originally from Chicago. He's been here since he was 15 years old. Graduate of Countryside High School, so he's been in the market for a long time. As I said, John is a Navy veteran, and we'll get John an opportunity to tell us a little bit about himself.
Yeah, I came down from Chicago at 15, kicking and screaming. My dad came out with Clearwater Police Department, and so I got brought down here, and I went to originally Dunedin. And then they split up and they put us in Countryside. So I've been in the area the whole time. I've had plenty of opportunities to leave, and there's just no reason to leave. This is home. So I've continued to move north as time goes by, because when we moved, we were Sunset 19, which was pretty much the drop off of civilization at that time. And I kept on moving up, and now my wife and I live in Odessa, and I did 30 years working with kids with abused and neglected kids, SED and EH, and decided I needed to step off from that. I wanted to do something else where I thought I could help people out. Obviously, helping folks is big with my dad being a cop and whatnot. So I decided that real estate would be a good way to do that. And so I got involved in that and joined up with Tri-Fin team, because I always, like to be part of something that's a little bigger than myself. And I figured they had a lot of good knowledge that I could glean off of.
All right. Well, you were in the United States Navy, and
yes,
that's a little big.
That's a little bigger team.
It's a little bigger team. They have really. I was in the Coast Guard. We had little boats. You guys had really big boats.
Big.
Well, there's the 6 foot joke too.
Yeah.
You have to be over 6 feet tall to be in the Coast Guard. So that way, if the ship went down, you can walk back to shore.
That's right.
And in all honesty, in the Army, we love the Navy because you know what? You got us where we needed to be, and you got our equipment where we needed to be. Because nothing would be worse than being out there without our armor.
And the bottom line is, I don't remember any T-shirts in that room when you stood in there and you raised your hand and you took that oath. I just remember a bunch of looking around and seeing a bunch of concerned looks on guys' faces and girls. So it doesn't matter which branch you went into. If you took that oath, you're in.
Yep. And I can tell you that, from my experience in the Coast Guard to what's going on in the military, they're all doing a lot of really good work. And I still have a lot of very close friends that are active duty military, including the Coast Guard.
Absolutely.
Yep. And ultimately, it said one thing in front of all of our tags. It said U.S.
That's
right. That's right. So,
Amen.
Our other guest, Scott Lynn. Scott is been in the market, been in the real estate, and also was in the mortgage industry years ago. A partner with Tri-Fin Realty Advisors, 16 years experience. So been in the business about as long as I have. So he's seen the ups and downs, the good, the bad, and the ugly. Scott has 4 children, 4 boys. God bless you. It's like having his own little army at home.
Baseball team.
There you go. It says here Scott hails from Michigan originally.
Go Wolverines.
Been in Florida for 25 years. So, everybody here has been here for a long time. I actually was born in Florida. I'm one of the rare breed. I'm a native. I'm a native Floridian. I know there's not a lot of us left. And Scott is also very involved with the Wounded Warrior Project, which is another great organization when it comes to veterans. So, Scott, tell us a little bit about yourself and tell us a little bit about Tri-Fin Realty.
Well, at Tri-Fin Realty, we started in November, came together with a collaboration with Alberto Babaki, a good partner, friend of mine, and we wanted to create something a little bit different than what's out there in the market. When you're trying to choose a realtor, it's kind of easy to think, well, what makes one realtor different than another realtor? And we wanted to answer that question, and we'll get into that a little bit more. But hail from Michigan, as you said, been in Florida for about 25 years. Not a veteran, but I have a lot of familiarity with that, being my dad was a pastor. We moved about 15 times, so I do understand having no best friends, nobody close. But coming to Florida, I found my family, found my home, and obviously found the business with Tri-Fin, and we're doing a great job for the community and with the Wounded Warrior Project and some of the other incentives we give to our veterans, such as military relocation professionals that we offer to families that are whether they're moving into the Tampa Bay area, moving out of the Tampa Bay area. We have that designation with our office, and we're able to help them with their relocation efforts. And we have a special place in our heart for veterans, just like we've heard on the show from so many people today.
Yeah, that's great. And, you hit on something there, and you'll hear me say this a lot on the show. What makes one realtor different than another? Why should I choose Realtor A over Realtor B? And I can tell you from my experience, I work with realtors every day. Every transaction we do, we're a purchase shop. Most of the business we do is purchase-based. We're dealing with typically 2 realtors on every transaction. And I can tell you from my experience, they're not all the same. There's very different levels of commitment. I'm a firm believer that if you're going to work with a realtor, make sure you work with a full-time licensed professional, not somebody that does this as a part-time hobby. Work with a career-oriented full-time realtor.
Couldn't agree more.
If you're working with somebody that is, got a 9-to-5 day job and they're doing real estate on the weekends, you're going to miss out. Especially in a market like we have today with multiple offers coming in on these properties, you got to have somebody that's nimble, that can work quickly and get that offer in for you. So, what are you guys seeing in the market right now? What do you? I see a lot of multiple offers. Tell me a little bit about what you're seeing in the market.
Well, right now I'm working with a lot of customers that want to get into bank-owned and REO properties.
Real popular.
It's a great option for them. It's like anything else. It's got its pros and cons. If you've got customers that have the financing, they've been pre-approved and they're willing to wait it out, that's a great option for them. They can get more bang for their buck. The problem with that is that you put in your bid and you wait your time, and it's not like when you're dealing with a single family homeowner where you put in your bid and the realtor can come back and tell you that bid's just not going to get it, and you can work with your clients and resubmit. With the bank-owned REO, you're just kind of waiting and hoping and praying. So, that's where I'm at with a lot of my clients right now.
I'll jump in there too. I mean, right now we're definitely still in a transition seller's market, which if you're a buyer and you're out there looking for property, you're going to run into this hands down probably on any property that you put an offer in. It's going to be a multiple offer situation. Right. And as you were saying, Scott, that's the most valuable part about having a full-time realtor. You got to have somebody who understands the statistics of what's going on in the area, what the values are, what the reasonableness of that offer is, and they've got to know those neighborhood demographics, and they've got to understand how to make your offer stand out from the other offers that are coming in, and especially when you're competing against a cash offer sometimes. It's an emotional decision, and so people are going to look at this, and they're not always going to go with the investor. They're going to look sometimes at the best offer that's going to create an emotional connection for that family moving into the home, and that's where we come in to make sure we make that connection.
Well, and out of that, Scott, are you seeing currently in the market, and John, are you seeing in the market, besides the multiple offers, are you seeing like mini bidding wars happening?
Absolutely.
So we're seeing kind of that
we're at
2002, 2003 ramp up towards the boom.
We are, and I think obviously you guys, me being in the mortgage business prior and understanding I guess the trenches that you guys are in and the valuableness of having somebody like you as our partner. In this market right now, we've got the Fed maybe stepping in to raise the rate just a little bit and moderate that down, but we are definitely from back in 2012, which would be about the bottom, we're at about a 21% increase. So right now, builders are raising their prices on every 5 homes that they sell. Banks are raising their prices to match the builders. So we're getting a little bit of excessiveness going on in the market, and we do need a little bit of moderation to step in, but that is exactly what we're seeing.
And it's a shortened inventory, too. And unfortunately, folks up north that were buried under 5 feet of snow over the winter didn't get the memo. They're not supposed to be coming down. They're coming down. They're looking for properties. So it's that constant supply and demand is going on, and that makes it difficult for us. But to what you were saying about, getting with a full-time realtor, that's also one of the reasons why I got with TriFin was so important, because I don't have the 16 years experience, but I do have the commitment, I do have the drive, I do have the urge. So I did want to get with people that when people come to me and ask me a question, I don't have to look at them and try to snow them and just baffle them. I can tell them, you know what, I haven't got that answer, but I'll get it for you right away. And I can call and get that answer as quick as I can for them.
And I'll jump in there real quick, Scott, just to say this is the whole reason the show is on the air, is to partner together the sources that you need to facilitate your transaction with experience, knowledge, and tenacity. Absolutely. And that's what we all are doing. And that's why we partner together. And when you're partnered with a professional like us on the show, you're going to have all of the resources that we've spent years cultivating so that you don't have to. We're going to do it for you, and we're going to make that transaction as seamless and at the end of the day, as happy for you as it can possibly be to exceed your expectations.
That honesty and integrity, is when you look back, it's never failed anybody.
No.
If you're honest and hardworking and have integrity, then you're going to be all right.
I don't know about that. I told my wife about our jeans one time. It didn't work out so well, so I'm not sure.
Well,
Fair enough.
There's always the exception to the rule.
Yeah.
Well, so, you guys hit on some really great and important points, and one of the things that we try to really facilitate, and like you heard me say in the beginning of the show, it's really about educating and making sure you have an informed consumer. We really drive the education piece. We want to make sure that the people understand their options. Not every loan product is right for every individual. Not every property is right for every individual. And sometimes you can get really caught up in the emotional side of it. And there has to be that calming voice sometimes that says, hey, let's step back for a minute. Let's look at this transaction. Listen, we're in the business of closing loans and selling houses, right? That's what we do. Correct. But in the end, we want to do what's right for the customer. We want them to walk away with a smile on their face so they say good things about us out in the market, because we live on referrals, right? And it's all about that. And if you're not,
reviews.
If people are not giving us those good referrals, or like you said, those good reviews. Listen, we live in a cyber world. If you go to Zillow and look me up, I've got 19, 20 reviews on there. They're all 5-star. They're all very good, and I'm sure you guys are very similar in that aspect. If you want to find out who you're working with and how they do business, Google them. That World Wide Web is out there, buddy, and you can find the information that you want on these people. So, I encourage people to do their research, do their homework, and educate themselves.
Jumping in on that, I mean, what you're looking for is exactly what you just said. You don't want a yes man. You don't want a person who's just going to tell you what you want to hear. What you want is somebody who's going to really give you that honest feedback when you're making a bad decision, or maybe need some direction for a better decision.
Great. And you know what? You guys really hit the nail on the head. So I want to thank you guys for coming on with me.
Our pleasure.
Scott,
Thank
Lynn,
you.
John
Glad to have
Freeman, you guys did a great job. I know you guys are true professionals. I'm sure we'll have you on the show again in the future. We look forward to working with you. And I hope that as we move forward here, people will reach out to us on tampabay.emm loans, and we're there to help you. So have a great night.